All right. Welcome everyone. We have Ashish Somaiyaa sir from WhiteOak Capital. Sir, thank you so much for taking out time for us. And topic hot है budget. बस आने ही वाला है and we want to understand कि budget के बहुत सारे सवाल लोगों के जहन में इसी में उठ ही रहे. तो first things first, what are your expectations from this budget and what do you think market is expecting from the budget?
So, yes, you're right. Budget is always exciting because at one level, if you see, people say that it's just a statement of income and expenses for the government of India, right? But then ultimately, where are they going to, where are they going to spend money or where are they going to invest and where are they going to raise money from? I think that is all that actually tends to cause the excitement, because where they will invest will tell you what is their focus. And where they want to raise money from will tell you how the taxes, or the borrowing or the interest rates, how are those things going to play out. So always something to watch out for. Second thing, as you know, that this is a vote on account, because immediately after the budget, in a couple of months, there is a general election. And while people are at different levels of deterministic thought process in terms of continuity of the government, but still more in terms of decorum, it's a vote on account, and then there's a general election, and then the final budget. But all said and done, even a vote on account is definitely an opportunity for a government to clearly define their areas of focus and also give, very, very good messaging or signals to the people at large, in terms of what to expect. And here, there is high probability of continuity of the government. Which means that the vote on account should definitely not be taken lightly at all. I think the vote on account will be a very, very strong indicator of what the final budget in June or July might look like. Watching for it very keenly.
Right. And so in the recent times, we've seen there has been a lot of volatility in the market. Part of it is attributed to the global sentiments, of course, but partly it has to do with the budget as well, of course. So do you have any opinion on any thought on this? Where are we headed in terms of this volatility? Is it going to increase? In your experience, how has it played out in and around budget?
No, see, generally speaking, if you ask me, budget has been a flutter for 2-3 days before and a day or two later. The last budget where I think, where we had meaningful impact, really, where immediately there was a reaction in the market was probably in 2018. Because in 2018, what happened was that long-term capital gains was reintroduced back into equity, which for the longest point in time, long-term capital gains on equity as an asset class was actually zero, right? So 2018, it was reintroduced back. Then, for example, 2019 also budget was not received very, very positively, because 2019 we had a vote on account, then the election, and then the budget. But during the budget, I think, dividends and some kind of incomes for FIIs, it was perceived that they came into the tax net. But then interestingly, in a few days, clarifications were given and it was rolled back. And then outside the budget, but just a month after budget, they announced massive corporate tax cuts, right? So from recent memory, 2018, 2019 are something which I remember. 2021, again, there was solid statement on disinvestment, but you know that other than Air India, nothing much really got privatized or disinvested. Overall, what I have seen is that while everybody looks at the budget very keenly, I think you should only see it to understand what the government's priorities are. But otherwise, if you see, GST is now outside the budget. Things like production linked incentive, like I told you, this big change of corporate taxation. So many things have started to happen on a continuous basis outside the budget, that when you actually come to your budget, it's more like flutter of couple of days before and then, a day or two. And recent volatility, if you ask me, is more attributable to global markets rather than actually anything to do with our upcoming budget.
Right. Understood. Sir, you briefly mentioned the key takeaways from this budget that we should have is, where the government is gonna spend its money. And that is where a lot of people in the stock market will get their clue from. So any expectations from your side? Like, I think last year infrastructure and defense were a big theme around that. Do you have anything in your mind, or you would like to wait and watch what the budget reveals?
Yeah, so clearly, if you ask me, two or three things that one is looking forward to. Correct. We know that in the last 2 to 3 years, there is a uptick in the investment activity or the overall CAPEX spend in the economy. And the good part is that a lot of it is actually driven by the government. So, like you rightly alluded to, defense, for example, across the board infrastructure, whether it is railways and ports and those kinds of things, right? So, to the extent that in the recent times, a lot of the CAPEX has been front loaded or front ended by the government, one is looking to watch for continuity on that. But at the same time, we should be mindful. Look, all of that thrust the government could give when we were coming out of COVID. And we were coming out of COVID, the whole world had very, very loose monetary and fiscal policy. And that time, nobody was actually watching for deficit. Everybody was watching that, okay, from a standing start, who bounces out the fastest? And we got a lot of brownies for really not getting impacted badly by COVID. And not just that, we also bounced back very, very sharply. But today, if you see where US policy has changed so much, and the world is now, looking to consolidate out of the COVID phase, I think deficit is something which the government will watch for. Correct. Same time, if you see, for example, elections. So, I don't mean to allude anything or don't mean to hint at anything, but the reality is that there is a lot of wide-ranging discussion about K-shaped recovery and stress or distress for some parts of agri economy or some parts of the rural economy. So, and we already know that there is a sizable population of this country where the government is supplying food grains or government is supplying them, directly money into their bank accounts. I have no grudges on that. I think that we should do that, right? Because we must support weaker sections of the society. And that, I think, actually, if you ask me, I think that is the taxpayer's duty. Because all of us don't have the same starting point in life, which means some of us who are relatively privileged must be supporting the rest, because ultimately it is one nation, it is our country, it is our people. But the fact is that there is talk of distress, and you will likely see more outlay for those sections of the economy or the society. I think net it is going to be a balancing act, because one is that the government has been leading investment, but now they will have to prioritize a couple of other things. It doesn't mean that the pedal will come off investment, because when government is leading investment, and if they want to focus on other areas, what they can do is to incentivize other constituents or other economic participants to invest more. So like they've been doing production linked incentives, right? So same way, they can announce a lot more other measures where private sector capex takes off and people are encouraged from the private sector to invest very, very meaningfully. Or for that matter, if you see, real estate and housing is big part of the economy, correct? That also the government can boost up. If they themselves want to prioritize on something else, then it is incumbent upon them to ensure that the other economic participants take up the load of the investment and the capex. But investment and capex, which has taken off after a long time, somehow they have to make sure that it continues, and we have, like, a decadal kind of upturn.
Right, right. And so, given the inflation concerns that we've had over the past year, with RBI had to juggle a lot around that, do you think that could have an impact on the capex moderation maybe we can expect on the cards?
So see, really, if you ask me, our inflation or our performance on inflation has been relatively quite good, correct? In fact, RBI will possibly watch for US indicators and US policy and then take a cue from that and see what to do with our, like, for example, right now, we are stressed for liquidity. I mean, our top priority to actually continue credit growth and to continue investment is basically, if you see the bank's feedback, that, they need the liquidity in the system there is a rush for deposits, the liquidity is tight. I think all of that is being done in response to US interest rates and US policy and to protect the rupee. So I think over the next 1 quarter or so, when we get better cues from what is going to happen in the US, that will give us some kind of elbow room to make our domestic policy a little bit more accommodative. So I think while inflation is probably not our top concern, it was, like you said, it was a few months or quarters back. But today, if you really ask me, preserving or sustaining our growth momentum and getting the right cues from what is going to happen in the US policy to create elbow room for ourselves, I think that is something one needs to watch out for.
Right. But getting back to the previous topic of themes and sectors, do you think green initiatives is also a sector that government may be focusing upon, given they recently also launched the rooftop solar scheme for,
Solar, yeah.
and you also, yeah. So somewhere around that, green initiatives may be a theme this year, do you think?
I think, see, that has to be a continued endeavor because all said and done, we have certain targets or certain commitments to achieve over the next few decades in terms of transforming our economy, more in terms of the green initiatives. Plus, I think if you see in India, one of the benefits of growing late is that you will be state of the art. Correct. Say, for example, China is well known. It has grown in a very energy intensive manner. And even a couple of years back, I read that for India, for every 1% of GDP growth, how much oil we consume, the oil intensity of our growth is lower than the oil intensity of growth of some of the other countries when they have had their trajectory. Already, we know that 40% of India's power generation is from alternative sources. And you know that the government is talking about opening one nuclear plant a year, talking about incentivizing solar panels on individual households, rooftops, etc. So I think it's a continuum, and I'm sure you will hear more about it. I think what people have been clamoring for is to actually somehow incentivize electric mobility. Now, I don't think that the government would do one over the other in a hurry because auto is a very, very large industry, and to artificially push something in one direction might be a challenge, but that is also something which people keep on discussing repeatedly.
Right, right. And anyways, they have done to an extent, given the 2030 deadline, they have to, have a 50% component mix of green auto sector.
Vehicles, yeah.
Right. Finally, since we have a positive time, one final question is maybe if you can give us top 3 advices or recommendations that you have, not recommendations, stock recommendations, general advices for the retailers that they should follow around budget. What should they get from it, and how should they plan their investments and trades around it?
See, I personally, if you ask me, at WhiteOak, we always believe that it is impossible to predict macro, like budget. Impossible to predict what actually will come. You can get a sense of direction or a sense of priorities, right? Like we are talking, correct? Because we all have some reading of where the macroeconomy is, and we know that there are much smarter, sensible people. So this is what they'll probably think of. So we can make estimates, guesstimates, but we cannot bet on macro. Secondly, budget is a big macro. Secondly, even if you predict the macro, you cannot predict how the market will react to that macro. Correct. So fraught with risk to do any trades which are budget centric, really speaking. Also, I've seen is that in the days of the budget, like you mentioned about green energy, like everybody talks about railways, correct? Now the defense. Now these are hot themes, so you can imagine that people will want to play around it, correct? Usual suspects, but I think that is more the 2 days before, 2 days later kind of thing. Whereas in reality, the action may be somewhere else in the fine print. So I think budget is something which it is better that you sit back, you absorb, and then make slightly more telescopic views rather than just microscopic views.
Right. This was absolutely amazing, sir. Thank you so much. We learned a lot from you. I hope you'll give us a chance to host you again and learn more from you. I just can't thank you enough for your time, sir.
Thank you. Thanks for inviting me. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.